that the gold price is unlikely to move out of control in the inflationary environment, meaning disinflationary environment that we see, then Bitcoin will be responding more to its role as a technology and a new asset class than to its role, like gold, as a store of value. And it should continue to pull away from gold in the years ahead.
In this recent interview on the ARK Invest YouTube channel with Cathie Wood, we uncover Bitcoin's transformative role in the future of finance. Cathie discusses Bitcoin's competition with gold, its potential inclusion in treasury reserves, and its significance as a technology-driven asset class.
Bitcoin, the Bitcoin price relative to gold, the gold price, you can see it broke out at the end of last year. It's testing now. We have seen the gold price go up recently. And the Bitcoin price, while it broke through 100 to, I think we got to 108,000, it's come in a bit, and makes sense that it'll be testing a breakout. As you know, we believe that the Bitcoin price has miles to go for all kinds of reasons that we will delineate in our Big Ideas report. Our Big Ideas report will be out in a few weeks, and in that report you'll see how we get to our Bitcoin price forecast. We are in print, the bull case being 1.5 million, and while we have changed the way in which we get there, we do believe we're going to get there, especially given this administration's sponsorship of Bitcoin. It may even end up as part of Treasury's reserves.
As we just heard Cathie Wood highlight Bitcoin's growing importance, now let's hear her dive deeper into its role as a financial game changer. She explains how Bitcoin is evolving from just a digital asset to a technology that could redefine the global monetary system. Now let's listen to what Cathie Wood has to say.
And once again, featuring Bloomberg, the Bloomberg Commodity Price Index. We are today where we were in the early 80s, in the early 90s, in the early 2000s. So by this measure, inflation has gone nowhere. And very recently, of course, the strong dollar, commodities are priced in dollars, has pushed pricing down. So again, the dollar is an anti-inflationary force. This chart, usually I show you really from 2008 forward, where the correlation between this metals to gold ratio, which is in the purple, has been very high when you map one against the other on that scale. That correlation has been very high until recently. We're taking this back to give you more perspective and to show you rarely has the metals price relative to the gold price been lower than it is now. This goes back into the 80s. And this is the period of disinflation. And typically you see that when that line is coming down, interest rates are coming down as well. If you follow this carefully, the correlation is pretty good. And that has not happened this time. In fact, interest rates have moved in the other direction. And I think there is a lot of fear about inflation, although if you look at the breakdown of long-term interest rates and you look at the explanation of, is it real growth, is it inflation, is it just the term structure, the longer duration. It's explained mostly by longer duration recently. But if this gauge of economic health, metals to gold, does not improve, then interest rates, we believe, will come down. Now, this brings us to the shocking chart from China. This chart really started in the early days when it first entered the World Trade Organization. So it is the relevant period of time. And look at what is happening to the 10-year government bond yield. It is collapsing. And we know that PPI inflation, well, is negative. So there's deflation from the PPI point of view. Consumer price inflation is pretty non-existent. What this tells us is that the government probably doesn't mind that its currency is depreciating. It's depreciating right now, and it's hitting the lows in terms of depreciation that we've seen, the lowest points relative to the dollar. So this suggests to us that they're trying to reflate their economy, but they can't do it if they can't get property going. That is such a big part of the economy, and it's 75% of consumer savings. So they are speaking a little more vociferously now about fiscal stimulus and modest monetary easing. But I think they're probably pretty shocked by what's going on here. This is the lowest in the government bond yield since China entered the World Trade Organization. And it basically says not all is well there. Now, what are they doing in response besides some of these easing measures from a policy point of view? They're really pivoting to innovation. And as we've mentioned many, many times, innovation is inherently deflationary if it's technologically enabled. And there are some surprises coming out of China. DeepSeek, their large language model, is surprisingly performant on chips that are not the most advanced out there. So China is innovating around some of the restrictions that have been imposed on it by the U.S. government's national security concerns. So partly that could be a reason this is going down, but I do think that there is much more of a true deflationary bust caused by overwhelming debt caused in turn by the property sector in China, which will take years to work out of. So it is pretty shocking to see the swift decline in recent months. Something there has changed. So here we'll go back to the controversies out there. Those who believe that we are going to have, a problem with inflation and interest rates believe that this metric, the S&P 500 divided by gold, is peaking out now and is going to roll over much like it did during the 70s. We disagree with that, as I think I've made clear. And you can see the market is trying to figure this out. It's in a holding pattern here. So we're watching this very carefully. And here is the S&P relative to oil prices. You can see on this score, the S&P is winning. Historically, boosts and soaring crude oil prices have led to recessions. They are not soaring now. And in fact, with what's going on in the Middle East, it could be with Iran not sounding as inflammatory, perhaps, that there will be a different attitude as this administration takes office once again. And we would submit that oil production in the U.S., if we do get that extra 3 million barrels, is going to weigh on the oil price going forward. and be good for the S&P 500.
To watch the full interview, check out the link in the description. We would love to hear your thoughts on some questions. Do you see Bitcoin becoming the global standard of value? And how do you think it will compare to gold in the future? Thank you for tuning in to Only the Savvy. If you enjoyed this discussion, please subscribe, like, and share our video for more engaging content about the innovative world of decentralized technologies. SIM swap fraud is sweeping the globe, and your mobile security is at risk. Switch to Efani and lock out SIM swap fraud and get the most elite mobile protection in the world. Efani guarantees 100% protection from SIM swaps backed by a $5 million insurance policy. Stay secure with reliable coverage, free international roaming, and unlimited data. Trust Efani to keep your communications and assets secure. Get military-grade protection, 24/7 concierge service, and a hassle-free upgrade. Click the link below for $150 off. Thanks for watching. Help support this channel and receive exclusive offers from one of our partners located in the description. We'll see you on the next one.